Hey everyone, welcome to this explainer. Today we're pulling back the curtain on the absolutely explosive launch of Gensyn. It's a project that is violently colliding the worlds of artificial intelligence and blockchain in a way that has, honestly, everyone talking right now. If you've been tracking the bleeding edge of tech infrastructure, you already know that the race to decentralize AI compute is heating up fast. And well, Gensyn just stepped into the arena, making a whole lot of noise.
All right, so let's get right into the crazy launch day action. We're talking about a staggering 250% price pump right out of the gate during its first major price discovery window. When the AI token debuted across heavy hitters like Binance Alpha, Binance Futures, and Coinbase, liquidity just instantly flooded the market. We watched the token spike from early launch levels near 3 cents all the way up to the 11-cent range. I mean, it was your classic, aggressive, high-volume crypto market debut.
But you know how these things go. That massive high, it was immediately followed by a brutal 45% dump, just wiping out a huge chunk of that early rally. The price crashed back down toward the 5-cent mark as early buyers, airdrop claimants, and short-term traders basically used that massive surge of first-day liquidity to exit their positions and bag their profits. It was an incredibly volatile environment, and unfortunately, it left a lot of latecomers holding the bag.
So the real question we've got to ask ourselves here is, beyond all this speculative exchange frenzy, what exactly is everyone actually trading? When the dust finally settles on a highly volatile launch like this one, you have to separate the token's manic price action from the actual underlying technology that's supposed to be driving all this immense market value.
That brings us to Section 1, what is Gensyn AI? To truly grasp the hype and the potential here, we need to take a look under the hood.
So Gensyn operates as what we call a DPIN. That's a decentralized physical infrastructure network. Basically, it's aiming to break big tech's absolute monopoly on AI training by crowdsourcing underutilized hardware globally. Think about it. Instead of relying on a handful of massive, tightly controlled server farms owned by major megacorporations, Gensyn envisions a totally permissionless market, a place where anyone, anywhere, can just plug in and contribute their idle compute power to train machine learning models.
And this whole crowdsourced setup connects through a full-stack architecture built on a custom Ethereum Layer 2 rollup. It actually relies on 3 main pillars. First is execution, to actually run those complex machine learning workloads. Next is verification, to generate cryptographic proofs that confirm the work was actually done correctly. And finally, coordination, which handles all the on-chain identity, the peer-to-peer agent communication, and of course the financial payments holding it all together. Which leads perfectly into Section 2, solving the GPU shortage. Because the core problem Gensyn is tackling here is the insane cost and severe global shortage of hardware right now. Wait times for the absolute best-in-class hardware can stretch for over 6 months, literally pricing smaller developers out of cutting-edge AI development. Just look at this breakdown. According to Galaxy Research, Gensyn's decentralized approach could theoretically slash AI training costs down to just 40 cents an hour. To put that into perspective, you're looking at Google Cloud and AWS charging around $2 to $2.50 an hour for comparable compute. If Gensyn can securely deliver on this 40-cent projection, it literally upends the entire economics of artificial intelligence.
But wait, here's the obvious hurdle, right? How on earth do you guarantee that some random computer halfway across the world didn't just fake the work? Well, Gensyn uses what's called an optimistic solving mode. Think of it as a really strict system of checks and balances. You have solvers doing the heavy compute work, verifiers checking it, and whistleblowers who earn bounties for catching fake or faulty work. It's an elegant way to keep the whole network honest.
Moving on to Section 3, tokenomics, burn versus inflation. Now we're shifting gears from the disruptive tech over to the structural market reality of the AI token itself. It's basically locked in this massive economic tug-of-war. On one side, you've got this incredible adoption flywheel, a 0.5% protocol fee on all network activity that automatically buys back and permanently burns point AI tokens. Super bullish deflation, right? But on the flip side, we have to weigh that against a highly cautious, bearish reality, a 10 billion maximum token supply, with some seriously massive unlocks for the team and investors kicking in after a 12-month cliff. As you can clearly see here, only a tiny fraction of that 10 billion total supply is actually circulating today. We're talking roughly 1.3 billion tokens, so just 13%. This leaves current and late buyers highly vulnerable to those future vesting schedules. It creates this precarious gap where the live market capitalization sits around $71 million, but the fully diluted valuation, that is sitting at a massive $547 million. All right, let's look at the broader picture in Section 4, the decentralized AI race.
Because Gensyn certainly isn't operating in a vacuum here. It is entering an incredibly fierce competition to become the foundational layer of open artificial intelligence.
Just take a look at this market map from Galaxy Research. It highlights an incredibly dense sector. You've got numerous projects racing to solve decentralized compute, AI agents, and ZKML. That's zero-knowledge machine learning, which lets AI process data privately without exposing the underlying inputs. I mean, it is an absolute gold rush for the infrastructure layer of Web3 right now.
So to survive in this packed market, Gensyn really has to prove that its unique cryptographic verification model can scale and actually pull developers away from the big established first movers in the DePIN space. We're talking about competing head-to-head with giants like Bittensor and its thriving incentive subnets, or Render and Akash, which already operate active live GPU marketplaces. Gensyn's unique selling point is its verifiable machine learning training layer, but it has to actually work flawlessly in the wild.
Which brings us to Section 5. Has it hit bottom? Honestly, after that brutal post-launch dump we talked about, this is the big question for tech investors and crypto enthusiasts alike. Has the bleeding finally stopped?
Well, looking at the technical indicators, they suggest we might not be at the bottom just yet. You see, high trading volume during a continued price drop generally points to strong selling pressure, what analysts call distribution rather than accumulation. Plus, there's just no clear reversal structure on the charts yet. No double bottom, no higher low to signal a real shift in momentum. Combine all of that with the massive gap between the live market cap and the fully diluted valuation we just looked at, and the risk remains highly elevated. So for anyone keeping an eye on this highly volatile asset, analysts are strongly suggesting you avoid going all in right now. Wait for a clear, definitive reversal signal. Instead, they favor a gradual accumulation strategy, like dollar-cost averaging, if, and really only if, you truly believe in the long-term fundamentals of their decentralized compute architecture and you're willing to weather those upcoming token unlocks.
Ultimately, it all comes down to this. Can this revolutionary decentralized AI infrastructure capture enough real-world demand before the floodgates of that new token supply swing wide open? Will that 0.5% buy and burn mechanism actually outpace the upcoming inflation, or will the initial tech hype just succumb to the harsh realities of the market? That is the billion-dollar question for Gensyn. Thanks for joining me on this explainer, and remember to always keep your eyes on the data.